Welcome back, everybody, and welcome to another podcast. So today I am here with Ads. As you guys know, for those of you guys that are inside of the day trading institution, Ads is super quiet. You don't see many messages in the chat, but all of a sudden he'll smack you in the face with a top 10 leaderboard on a funded company or a $10,000 payout, or when he decided to go and buy himself 3 Rolexes just because. Now, from my understanding, as you're essentially a 7-figure funded trader, you have multiple different funded accounts, and you've gotten paid out up to what, $250,000 last year, was it?
Yeah. So up to date now, for the last 2.5 years, I've just withdrawn just over $250,000.
That's fantastic, bro. So I want to learn a little bit more about your story, your background, how you got started into trading, and ultimately what led you to where you are today.
For sure. So initially, I just started off, in university, and I came across the typical broker affiliate deals from one of the signal providers. So I went down that route, got a signal, joined a signals group, and luckily, beginner's luck it must have been, I made like my daily wage, which was at the time like £60, so like $60, the equivalent of that basically, in the markets with the first signal. So when I realized that was like something I could be, doing and much more, I went down the rabbit hole from there. And I think I was about 19 years old at the time. So yeah, 19 years old. And at that time I was working as a shop floor assistant. And also shortly after that, I was working as a warehouse worker, doing 12-hour shifts like through the winter for around a good 9-10 months. Just really grinding and trying to get my money up, because I understood that at the end of the day, I want to be my own boss, live life on my own terms. And I saw, the likes of the drop shipping, the affiliate schemes, and then the SMMA sort of gurus out there showing that they can make money online. So that's what really attracted me to trading in the first place, and, helped me find Forex in the first place. But then, went down the rabbit hole from there, tried to, understand how the markets work. And this is all during the time, like I said, I was literally mopping floors as a cleaner on like minimum wage. And at the side of that, so I do a 12-hour shift, come back home and just go on the charts, backtest. And I actually was part of a few, trading group chats and things like that. And came across a mentor at the time, just someone on Telegram, who just actually showed me, market structure and the basics of trading. And then from there, I actually went on to get my first 10K FTMO challenge. Again, this is whilst I was still working. So I still always found time to, work towards my goals, even during the working hours. So yeah, I went down the 10K FTMO route, and I actually passed that on my second try. And from there, I understood that, okay, if I can make 10% gain without losing 5% in a day or 10% overall, I can do this now on a 100K account or a 200K account. And when I found out about the prop firms and I understood the leverage they provide you with, and their overall risk to reward, that's when I just started going for the 100Ks, the 200Ks, and from there it's pretty much only been up.
So it's quite interesting that you started off with, just challenges. And
one thing about to mention, I actually started off with like demo money to start off with, like demo to test my strategy out. And then I went from there onto like a small $100 account. Even in the actual warehouse while I was working, I remember within like 2 weeks, I actually flipped the $100 into $650 in like synthetic indices. It's like a whole different market.
The synthetic indices are crazy.
Yeah, exactly. It's just like, it was super clean market structure. I just managed to find that. And then, that's when I decided to put that money into the prop firm challenges and get funded as much as possible and kind of go from there.
So at what point in your trading career did you actually decide to go with the funded challenges? At what point were you 3 months in, 6 months in?
I think I was like, 6 months in. 6 months into like the little mentorship that I had with this mentor from like Telegram, South African mentor, who's not on socials or anything. He's just a random person. And that was like 6 months into the journey. I was working, going back home, back testing, going on calls, and then pretty much just alongside that trying to grow my demo account size, the 100K demo account. Whilst I was working, when I saw that I was working, I just went to the 10K FTMO challenge.
So at the point that you were already trading on your FTMO challenges, did you have any struggles that you were facing with that separated you from where you are today?
Yeah, for sure, 100%. First of all, like experience, I've realized in this game is like number one. Experience is the best teacher. And without that, you really can't like you can't get the best performance out of trading. Like experience is such a big player. And the main thing I'd say was risk management. I had like no clue about risk management. I was just kind of thinking like, what lot size do I use for this account? Like I didn't have any understanding of, stop loss size and what that would equate to in percentage, risk. And in terms of other struggles, I would just say Yeah, to be honest, my strategy back then was so simple, and I didn't even know about the institutional trading, the trading like the banks and all these other things. So to be honest, it was actually like to a point so simple that it was it's pretty easy for me back then. But at the same time, the risk management played a big factor, and that's what caused me to like blow multiple accounts, like, a little bit down the line from there.
How would you differentiate your strategy from then to now? Because when I look back on my journey, I had probably a bunch of different things that I was trying to trade. But then as the years progressed, I found that my strategy just became more and more simple and just really focused on what my foundation of my system actually is compared to
Yeah,
that.
for sure. Like back then, to be honest, the way my cycle has gone is I started off with a very simple strategy, and then from there, pretty much I went down this the rabbit hole of, again, the SMC, the institutional trading, trading like the banks, and then I came right back to my own original strategy. Is weird how it works. The only difference I'd say between then and now was back then I was using multiple indicators, looking at multiple things like fractals, loads of moving averages, RSI. But to be honest, these things are not things that are like wrong. It's just that I was heavily relying on them back then, thinking that these indicators would move like in terms of like help me to a point where it can just tell me in advance. But there is these lag, like they
indicators are laggy.
Yeah, they're laggy. So that's what the problem was there. But from then, I've just kind of understood that side of things, understood more of liquidity when it came to this the institutional sort of trading style, and then that's it. And I kind of mixed both of them together now. But mainly right now, my system is mainly market structure, support and resistance, and a little bit of liquidity involved. That's pretty much it.
So can you break down what you mean by a little bit of liquidity?
Okay.
Because I know the majority of the audience out here is probably listening. They already know what market structure, kind of like support and resistance, could look like. But what about liquidity?
Yeah, for sure. Okay, so I'll just start off with like full breakdown. So like the market structure side of things, higher highs, higher lows, lower highs. Just understanding what trend the market is in based on the time frames. Support, resistance, or supply and demand. These are like the pivotal areas where I expect the market to turn from, maybe on a day-to-day or a weekly basis. And then we have obviously the liquidity side of things. This is like more to understand when you see like a crazy wick sort of surpassing a previous high or breaking out of a certain range, just to, you can say, like stop out certain traders and then go the completely opposite way. So understanding that side of the liquidity was what helped me refine my edge in the market structure side of things and the support resistance. So seeing like, okay, the market is at a point right now where liquidity could be high, volume could be high. That might be during like a red folder news event. So the volatility occurs. The wick maybe takes out a few highs or something, and then it actually maybe closes under a support resistance level, for example. And now you can determine your bias from there, kind of going forward.
So moving or kind of reflecting back on your past, how would you say, because we all know experience is everything in the markets, anybody could come in, learn from me, and they can start applying exactly what they learned from me in a short amount of time, retrospectively speaking. What would you say, like, when it comes to the last few years of your trading, how important experience is and what you've been able to actually do to improve your edge over these last
year? For sure. So when it comes to experience, honestly, like there'd be trades. I remember, in fact, the crazy thing is I remember talking to Chow. Yeah. So another student from DTI, I remember just like talking to him a few times, and he mentioned as well, like I asked him one time, like, why would you hold a trade for this distance? And he just said experience. And from that point on, it resonated with me like a few years down the line, because I also get asked the same questions by other people. And that side of things is just kind of like experience. For example, not closing a trade out so early and instead letting it run, because you understand with experience that based on the momentum, the volatility, and the structure that market's creating, and overall the price action, based on those years of experiences or those hundreds of trades that you've put in the past, you can now sort of anticipate where this is going to go. And that all stems from experience. And just in general, managing risk, keeping your psychology calm when you are, hitting your stop loss instead of blowing accounts and revenge trading, that all comes from experience. Maybe in the first year, you'll blow, tens of accounts because you don't understand how to control your emotions, how to keep discipline, and how to maintain risk management in the markets. But I think for me, the experience has helped so much to the point where the pain is numb now from losing so many accounts, to a point now like I can just understand that, okay, if I was to go down that route again where I'm revenge trading because I take a loss, or if I over leverage, I know I'm going to blow the account, and blowing the account is so stressful, or losing a big percentage at least to try and get it all back. And I understood that playing like defense in trading is the number one way to go, because having the account, preserving the capital is so much more beneficial than trying to just hit a home run every single trade. And that all stems from experience.
Of course. So like when because I mean, there's a few different topics that I want to touch up on, but I'm trying to prioritize which one I would like to actually speak about. So when it comes to like you being a funded trader, how do you see like the funded space moving forward? How would you recommend somebody to really diversify? Because of course, there's like a lot of things going on nowadays.
Sure.
There's all these different prop firms. Like, what are you doing to actively diversify?
Yeah, sure. So I've understood now, like especially recently, because in my last 2.5 years of trading with prop firms actively, genuinely, I've actually had no problems with payouts with a lot of firms. Like, in fact, all the firms I've been with, pretty much like no problems whatsoever. Apart from recently with TFT, I've been wanting like an 8K payout, but it's just not exactly arrived. But yeah, now firms like them and like 3 or 4 others are starting to like go down. And exactly, it's not somewhere I would now start to vouch for prop firms. However, I would still say there are a few good still out there where you can still leverage your capital. I do also say to people like a 50K account size or 100K account size isn't going to change your life.
I agree.
Yeah, exactly.
So it's not really worth it.
Literally, yeah. So I'd say like a minimum for me, I started seeing like improvements. I started seeing a real difference in my life when I started to get funded. I'd say 300K and above. Because I mean like 2% on there is around $6,000.
Yeah.
3%.
And you have multiple of those accounts.
Exactly. So having them, it really pays. And for me, I would say if you can try and find a firm where you understand, like, for example, like yourself, a real trader with real results, authentic, proven, like, data and results overall, that's who you want to go with. A lot of people out here, it's like almost anybody can become like a CEO of a prop firm nowadays. Anyone can make a prop firm and you don't really know who's really behind it. So having a face behind it is one thing you want to look at. Having someone that's even been in the markets like yourself, trading wise, that's what you want to look for. And yeah, in terms of what I'm actively doing right now is, of course, the personal account sizes, personal accounts is what I'm looking to invest a lot of my profits into. To be honest, for the last 2.5 years, I heard a lot about, diversifying my profits into personal accounts. The only problem for me was I used to think to myself, if I was to deposit at least $50,000 of my own capital into a broker, or 100K even, what could I do with that type of capital in prop firms? How many funding accounts can I get? So I kind of
probably millions upon millions.
Exactly right. So that's the way I looked at it, and I decided to just kind of stick with the prop firm route even till now. So I haven't actively been trading with a personal account until
and your exposure is a lot higher too on your own personal account.
Exactly, yeah. And that's in fact like one question I had for yourself, like with especially now with the prop firms sort of being a bit of a shady space right now. Still, there's potential. There's still potential for it to improve. It's not like all hope is lost, but when it comes to diversifying, yes, of course, you still want to make sure you have your exposure in the market in terms of the risk of multiplying your capital, the potential of multiplying your capital through the personal account. So yeah, I was going to even ask yourself, like, what would the benefits really be as of right now for me to just go in there? Because for me, I just see the prop firm route as a much higher risk to reward.
I agree. I agree 100%. Like going back to like because I essentially stopped trading prop firms when I had my big payout with FTMO, where it was like the account went all the way up to $170,000. So the fact that I was able to leverage, I don't remember what the account was at that time. It was $300,000 account. I think, from my understanding, from my recollection, it was probably around like, let's call it on the high end of the spectrum, like $1,500 with FTMO, which it's probably less. It's probably like $1,200.
Yeah, something like that.
Yeah, it's probably about $1,200. I was able to leverage $1,200 and essentially turn $1,200 into, well, I mean, with that account, I had gotten the funded account, and then I had gotten a $45,000 payout, followed up by another $45,000 payout, then followed up by my 6-figure payout. So I was able to turn $1,200 or so into roughly almost like 200 grand. Almost 200 grand. So you're not really going to be able to leverage that anywhere else. Like, you're not going to be able to just deposit $1,200 and turn $1,200 into $200,000 in the span of 3 months. The probability of that happening on personal capital is very low. But when it does come to personal capital, I mean, you have to kind of follow like the expectations of what a prop firm capital could potentially do for you, where you're looking to gain maybe 5, 6, 7, 10%. Let's just call it for random example, points a month on that account. So, I mean, when it comes to me, and then looking at the prop firm situation that's going on right now, there's of course going to be a lot of prop firms that are going to be left behind that can't necessarily afford the amount of winning traders that they actually have on their system. For me, when it comes to an individual, and if I was in a standpoint where I was actually trading prop firm capital, I would just, again, diversify with as many as possible, because maybe this one goes down here.
Exactly.
You have like 4 or 5 different accounts with these prop firms, And then on top of that, it's all funneling back to your own personal capital. But then you have to have like your own level of self-discipline when it comes to your own personal capital, because if you have 300 grand in prop firm, let's call it you have 300 grand in prop firm capital, that's all funded. Your exposure was maybe a few $1,000s versus you have 300 grand of your own capital on whatever brokerage that you're trading on, your exposure is 300 grand.
Yeah.
And just because, and I feel very heavy on this, just because somebody's a professional trader doesn't necessarily mean that they're not at risk to blow the account.
Yes.
Because they're still human at the end of the day. It only takes a few bad emotional decisions from actually still blowing an account. It doesn't matter if you've been trading for 10 years. Doesn't matter if you've been trading for 20 years. Like there's still that percentage where you actually could fall out of like the consistent profitable trader and actually go back to basically making those same mistakes any rookie trader would make. And anything in your life can effectively
trigger that.
100%.
Yeah.
100%.
Yeah, no, that's what you said about regarding diversifying the multiple accounts. That's the position I'm in right now. So only out of the 5 accounts that I had, or 4 prop firms that I had, only one of them, which was like TFT, that's kind of down right now. But the remaining other ones, I've still like got roughly $1 million in funding right there, and they're still working. They're still going well. So yeah, in that sense, I've diversified them. I'm still looking to leverage them as much as possible, and then reinvest those profits into like a brokerage at some point. And then I do have to understand that trading, prop firm accounts versus a personal account requires completely different discipline. Like you can blow like 2, 3, 4, whatever. Exactly. $50,000,
$100.
exactly. And then you can just make it all back in one payout. But it doesn't work like that in the brokerage. So
you take huge losses.
Exactly. Yeah.
You take huge losses in the market. So when you first started trading, because I feel like a lot of traders nowadays, when they get started trading, like their goal is to become a funded trader. Like that's their end goal. When you first started trading, what was your like, that's my goal. I want to be this.
So I just saw myself as using trading and just day trading in general to act as a vehicle for other incomes, for other businesses, other ventures, to be able to just print money like that, to literally click. I know it's not exactly like this, but to an extent,
and essentially, it kind of is. Yeah.
To an extent, you're clicking a button and you're printing thousands, tens of thousands, hundreds of thousands of dollars like that. Then it's a case of understanding that, okay, you need to understand that this is a lot of money that you can make in a very short amount of time. But then also to keep that up and maintain that throughout the whole of your life is going to be a bit stressful, even if you've got your strategy down packed and it's
very
exactly.
And you're going to have to constantly modify that strategy as new market.
Exactly, for sure. Yeah. So, I mean, the way I've looked at it is, and I've understood is the way to like sort of get rich in a way is to take a lot of risk with a little bit of capital, and then to stay rich is to take a little bit of risk with a lot of capital, and that way to maintain it and to also diversify into other streams. You've got like the watches, you've got the real estate, you've got crypto markets, you've got personal brand, you've got these businesses. There's so many opportunities there, and especially even like where we're at right now in Dubai. There's so many opportunities to really let your money work for you in a different manner. And at the same time, you have to understand when it comes to trading, you want to be in a clear headspace. You don't want to be trading out of desperation, because when you're trading out of desperation, you're trading out of emotion. And when you're emotional, you're making bad decisions, and that can lead to a blown account, and that's the last thing you want.
Of course. So then, what do you think about the people that are just getting into the markets now, that like kind of like their end goal is to just become a funded?
Oh yeah, no, they can't have that as the end goal. Like you need to think bigger, you need to dream bigger at least. And being a funded trader is just, that being the end goal. Okay, it's a good goal to have. It's definitely a good end goal, because at the end of the day, you can use that money and leverage that money to put into these businesses. You need to just understand that this is a vehicle to, it's a means of, supplying other ventures, in my opinion.
So kind of backtracking a little bit, when everything was going well for you, at least at its peak, because now there's a lot of issues with a lot of different prop firms. How did you manage all of your funded accounts?
Yeah. So when it came, so are you talking about like now? Like,
yeah.
Okay. So nowadays I do class myself as an aggressive trader. To be honest, I've understood this, not the solution, but just the way to really sort of, I wouldn't even say milk prop firms, but really leverage them to the best of my ability. I understand that being an aggressive trader is probably the best way to go about trading with these prop firms, but not to like a crazy extent where you're risking like 4 or 5% a trade. I'm just talking about like, if I want to get paid and actually receive capital and receive payouts that are going to be, impacting my life in a positive way. A 1 or 2K payout isn't going to do crazy.
It's not going to cut it.
Exactly right. And to just trade from perspective of like, covering your bills is also very like risky. You want to like have the goal at least to be making like tens of thousands, hundreds of thousands. And the best way to do that is to like diversify your portfolio into different risk sort of categories. So with my categories, with my like 3 or 4 funded accounts I have right now, one of them pretty much is like a low risk one, because I know that if the other two, which is like a medium risk and a high risk account, if they were to get blown, at least I have at least one to go back on. And I know my edge itself is a profitable edge. I have like roughly a 1 to 1.5, 1 to 2 risk to reward, and I have a 60 to 75% win rate. And that's been proven along these prop firms multiple times. People can go on the leaderboards themselves and like click on my profile, and it's literally right there. It shows all my trades, all my history. And yeah, with that being said, diversifying my portfolios into the low risk category and then pretty much aggressive, the remaining, has allowed me to just really keep that balance going and maintain consistency. Because I have blown funded accounts before. Like I have to keep it transparent, and people have to understand that if you are trading aggressive, that's the risk that comes with it. But as you refine,
especially with those super tight parameters.
Exactly. Yeah. But yeah, exactly. So with that being said, but you have to also understand on the bright side, the reward. You know, at the end of the day, no risk, no Rari, as they say, and no reward. So that's the way. Honestly, that's the way I've been looking at it. Like talking to a lot of these traders in the space as well. Like Claudio, he's one of my boys. We're like really close, and when I jumped on a call with him a few times, and we just messaged him and a couple others. Even they've all been saying, all these top traders have been saying, you need to eat that risk if you want to hit those type of payouts.
For sure.
Yeah.
For sure. You know what, Claudio and DTR, right?
Yeah, for sure.
Yeah, because I mean, bro, what was his last 2 payouts from what I remember? I think they were both like, the payouts came up to like $80,000. And even if you would have blown like 3 or 4 funded accounts in the process.
Even 10, like.
Call it 10. What do you have been down? 5 grand? 6 grand for making $80,000. I feel like when it comes to the funded space, you have to have like a different approach, because when you look at it, you're only investing a few $100s to at the bare minimum, like a few $1,000s for like these really big accounts. And even if you do blow like 10, 15, 20 of these funded accounts, if you look at your end of year P&L, if your payouts are significantly larger, then you're still profitable at the end of the year.
Yeah.
I believe that blowing a funded account isn't necessarily like something that's bad. It's just part of the process of being a funded trader, because your parameters are really that tight.
Exactly.
Especially like looking at the futures prop firms, right? With the US futures prop firms, like your parameters are so tight. On a 300K, you have a trailing max loss of $7,500. It's not even 10%. You're talking about, let's call it 3%.
Yeah.
Right. So if you get 4 or 5 payouts that are 30, 40, 50 grand, right? And then you look at it, you've only invested $1,200.
Exactly.
So it's nothing. So I really, like, there's a lot of people that are like, I've seen that there's other people that have blown funded accounts. They're like, oh, you're a failure because you blew a funded account. I would strongly.
Yeah, no, I feel like the space is, a lot of these traders like online in the Twitter space, in the Instagram, whatever, they talk about trading with these prop firms as if it's trading with like your own capital. And like I said, they're so different, and they're talking about, okay, guys, you need to be risking like, you know, I mean, I understand from like a beginner perspective to be risking low like 0.25, 0.5%. But at the end of the day, like realistically, like if you want to make money and you really want to change your life and your family's life, and you have access to these funded accounts, why are you risking so little? If you want to make a change, like you need to be putting that sort of risk behind you. And again, like for example, like with talking to these traders in the space, when I've seen these like A+ setups, but when it comes to hearing these voices on social media telling you to just like, you know, risk no more than 1%. I've heard people say that don't risk no more than 0.5% at all ever, because then you'll blow the account. Guys, blowing the funded account isn't the end of the world. Like,
dude, what if you lose $1,200?
Exactly. And then with the potential to make tens of thousands or even 100K a day. I know people that made 100K a day with a prop firm, even with the 5% sort of daily drawdown, but they've risked around 4 or 4.5%.
Yeah.
At the same time, it's because they know the setup. They've understood from their journal, from the data.
Yeah, they probably averaged in.
Yeah, exactly. Yeah. So they've scaled in as it goes along, and they've taken that risk and it's played out, and they've paid themselves like 100K in a day, or, you know, 40, 50K even in a day.
Yeah.
And at the end of the day is really leveraging prop firms. And instead of listening to these voices outside telling you to like risk so little and maintain consistency and spend months on a challenge, guys, like that's not the way. I mean, time is money. I've been saying this to so many people, like time is money. And if you're being encouraged by some of these prop firms, you know, prop firms to just spend time, and I see like loads of these prop firms sort of congratulating and rewarding people to just, I've spent like 2 months on a phase 1 and then like a month on a phase 2, and then they've blown the account in the end because for 3 months they've been not paid, right? And they've been trading for so long without any reward. Yeah. So when they got to the funded stage, they get a bit overexcited, they blow the account, and then the prop firms are
It's 2 months.
Yeah, exactly. So you really need to make use of the time that you have. And I've been saying this to my friends around here, like, guys, you need to get into the funded stage, right? Funded prop firm space, and not just like, go this, don't risk small with it, like really leverage it.
0.25%.
Exactly, yeah, bro. It doesn't make sense. So I've been telling them, like, risk 1, 2, 3, 4% and get that one trade, one hit. And that's it. You can secure that for a payout and pay yourself. And I said to them, make use of it because you're going to regret the chance to do that if anything happens. And literally within like 3 weeks of that happening, the prop firm, the whole drama started from there. It's crazy.
Yeah. I feel like people should really, because I do see it as well, that a lot of people are like, oh, I'm only risking like 0.5% per position per trade. And there's so many different perspectives. There's no one wrong way of trading, but when it comes to prop firms, like, you have to understand, like, it's not your capital.
Exactly.
So I would actually do the opposite. I would be looking at risking maybe like 1 or 2% on your own personal capital. For me, like, what I like to do is just leverage my profit as much as I can. So as my own personal account really starts to build the equity and I really start to have a positive cash flow on my personal account, that's when I'll risk more, but of the profit. If I were to ever get into like let's call it, I have a 10% win streak and I start risking 3% per position. If I go back down to that 10% and I'm break even, I'm going back down to like 0.5%, 1% risk until I build that 10% back up. And that's how you really see like that exponential growth in your equity curve versus some people like that, like more stagnant and linear. But again, it's your own personal capital. It's not a prop firm account. So the prop firm account, I would say the goal is to just literally get in, pass the challenge as soon as possible, look for your R multiples, and then get to that funded stage. And really, from that point, you could do whatever you want. Pretty much. If you want to secure 2 or 3% payout, which on a 300K account, you talk about anywhere between like, let's call it $6,000 to $10,000, $12,000. All right, cool. And then you have other people that'll go in and try and make $40,000, $50,000, $60,000, call it a day on that prop firm account. Because realistically, on $300,000, if you make 10% in a week, which is possible, only risking like 2% with a positive R multiple, it's super doable, right? And then you move on to the next one, the next one, the next one. And I'm seeing like a bunch of people too, like especially like the US prop firms, they'll go and grab like 20 different challenges. 20 different of these challenges. The thing is, they're a little bit harder to maintain, but if you go grab 20 different 100K challenges, you have $2 million in funding. If you make 10% in that month, you're making $200,000. But most of them that I see, they get paid out like 4 or 5% and then call it a day and then
because also you have to understand like the psychology as well when playing with these numbers, and that's what came in my sort of journey. I was kind of exposed to this $10,000 a month, from online, scale to $10,000 months and through these businesses. So it was like a little bit of a roadblock for me recently, like that I kind of now only kind of surpassed, which is where like hitting like a 10K in profits was like the not a goal, but like that's kind of where I'd sort of chill out. But I'd be told by people like, bro, you can really just, you can go more. Why do you stop here? And it's true. I could definitely carry on from that point. But also I had to understand that, you can't listen to too many outside noises, because that's what led to me like blowing a couple of accounts after I was in profit, because I wanted to chase that 50, 60, 100K payout. But because psychologically I wasn't there and I was only doing it for the sake of maybe trying to just beat a personal record, or like, trying to beat my previous PR, that's not the approach to go with. But instead, as I've developed my edge and I've journaled it and I've had this data to back me and give me that confidence from like within, it's really helped me understand that, okay, it's just a profit, it's just only 3% or something, or just over 3% of a 300K account. I know my strategy has a good R multiple, it has a decent risk to reward. And if I just continue applying my strategy in the market space, in the market, I can go for 5, 10, 20, 5, 10, 15% like over the next 2-3 weeks.
Yeah, like I feel like it really just has to, a big portion of it when it comes to like trading psychology and like your P&L and everything really just has to do with the relationship that you have with money and how much money that how much of that dollar value actually means to you in accordance with your relationship. Because I actually remember too, when I was trading FTMO, I don't remember when this was, 2020, 2021, it was years ago. And I did actually get to like that 100K mark, and I saw my $300,000 account go to $400,000, and I broke that mark. I remember I was actually on live too. I was recording on Zoom. So I used to call out signals and do different things.
Yeah.
And
also you're live streaming?
Yeah, so I was live streaming, and then I live streamed the account go from like 380,000 to like 402,000.
Okay.
And then I remember I called an acquaintance of mine or a friend of mine at that time, which we don't really no longer speak. And I was like, what do I do? Do I just secure the 100K payout or do I go for more? And he was talking, he's like, no, just secure it. And you know what I'm saying? He was just like, secure it. Like, that's it, just secure it. And I analyzed the situation. I was like, well, am I really going to listen to somebody who has never gotten to this point in their trading career?
Yeah.
Or am I going to push my own boundaries and push myself out of my own comfort zone to really try and make more?
Yeah.
And ultimately, when I made that decision, I was like, okay, you know what? I'm going to set a trailing loss for myself, where if I get to $70,000 in profits, so 370 grand, that's when I'm just going to cash out. So I'm going to try and margin the 30 grand that I have, or try and leverage the 30 grand that I have in equity on the account, so I could just continue to push forward. And I did exactly that. I think I bounced around in between like 90 and 100 and something for a little bit, and then I immediately started seeing my equity curve go up to an extra $70,000 in profit. So at the highs of that specific FTMO account, I was up like over 50% in less than 30 days, and it was like $170,000 in profits. Then I hit a losing streak, and I ended up cashing out like at 140 and kept 70% of the profits. But if I would have been listening to the other individual, I wouldn't have been.
Yeah, no, I've definitely been in that position before. Like I've been up like, let's say 10, 15K in profits. And then I'd hear like, people telling me like, yeah, close now. But that's because the value of that dollar or that amount means something different to them. Yeah. And I did that. I listened to them. I'd close out. But the one time where I decided not to listen to that, I hit my best day, which was over like $21,000 in a single day. And even that isn't like something, it might sound crazy to a lot of people, but for me personally, it's not like, it's not insane, because the way I look at my performance with these prop firms is like, I look at it from based on all the accounts for the month. Like for this month, I think I'm at 35K in payouts for just this month, but my best ever sort of month with payouts has been just around $60,000.
That's fantastic.
Yeah.
That's fantastic. And again, this is from you said you were mopping floors?
Literally, yeah.
That's crazy.
In COVID times, just mopping floors, working like literally from 7 a.m. in the morning to 7 p.m. at night. And bro, like in the winter, in the UK especially, like I was driving my little Kia Rio, and bro, the key wouldn't even go into the door, and it'd be frozen. And you'd go in the dark, you'd come back in the dark. But at the end of the day, ultimately, that work ethic, that determination, that perseverance translated into the markets. Yeah. Because I understand, like to a lot of people, they need to understand that having discipline, having that work ethic, having that determination and consistently keeping that up outside of the markets, whether it's going to the gym, eating healthy, maintaining goals with, outside of the markets. If you can maintain them and stay true to them and really practice them outside of your charts, when it comes to the charts and just sticking to your plan, ultimately you will stick to your plan and you won't, really divert from it as much, because you're doing it in real life rather than just clicking a couple buttons and looking at a screen. Yeah, and that's the thing too. I feel like a lot of people have the expectation of trading, since you're just at a computer and you're really just analyzing and performing technical analysis, that trading is like something that's easy. But you need to have, I feel, one of the most disciplined work ethics when it comes to the markets to actually be successful in this industry, because the majority of people fail. And what do the majority of people have in common is the majority of people are lazy. Mm-hmm. So like for a lot of people, like if you're not journaling, if you're not looking at your own performance, if you're not consistently analyzing your mistakes, it's like, where are you going to see the growth? Like even me out here in Dubai on vacation, let's call it every day at 5 o'clock, I was like, okay, cut off whatever I do. I got to go back and I got to sit down on the computer and get what I got to get done. And the markets are about to open. Right. So it's that level of consistency and that level of discipline that's going to take you to ultimately where you want to be 100%. Versus just kind of like opening up your computer. Oh, let's kind of see what the charts are doing today. Yeah. Moving forward. And I feel like that's what separates the person who wants to become a trader to somebody who's actually making money and pulling money out of the market. Yeah, exactly. And that's how it's been like with my boys here. Like, to be honest, I trade primarily off my phone. I've just been doing that for my whole life. I know you recommend doing it off the desktop, but for me, I just found like just more easier for me to like, because if I'm at the desktop, for me, in my opinion, for me, I've just been like, when I'm at the desktop, it's kind of harder to go away from it. So yeah. I've just like, whenever we're out and it's, again, I traded pretty much exactly the same time as yourself, like 5:30. If it's time for me to see a trade setup or, the time's coming, I just really just zone out. I'm just in my own space for a few minutes or whatever, looking at the markets, and I really just sort of lock in at that moment in time. And that again is the discipline you have to have, no matter where you are, even if you're on vacation, even if you're at home or at your desk. That's the type of discipline that you have to be implemented. Yeah, I don't really think there's anything wrong with trading off of your phone. I personally like trading off of my
computer setup, because of course, like I have all these different programs
Right.
open. Not only do I have, either let's call it MetaTrader, or I have maybe TradeOvate actually open, but I have all my order flow programs, which is I can't do that on my phone, But really, it just comes down to having that work ethic is what it is at the end of the day. So then, moving forward, what are your goals? Your goals now that you're out here in Dubai. You came from, where was it? The UK?
UK, Manchester. Yeah. So the goals are definitely to just keep scaling up my capital, even with what's ever going on in the prop firm space, but then also to really open up my own 100K personal account, and then from there to actually reinvest these profits into the likes of the real estate. Again, like you mentioned earlier before the pod, how it's pretty hard to sort of liquidate the profits in there, or the equity in there. But at the same time, it's just another way to just keep your money safe, at least. So I am looking into sort of real estate. Crypto is another thing I've started to look into as well. I've seen the amazing growth in there. Also, my personal brand, I've understood how life-changing this whole what you've taught is, and I've been helping multiple people out as well. And also just showing the results I've been showing through my Instagram, through my social media, showing multiple payouts, showing the transparency, because that's another thing that lacks so much in this industry. Having a transparent mentor, having someone that's proven and got real results. Like you'll see people with 50K followers who haven't shown a single dollar of profit, but they'll be doing up like 1 to 20 risk rewards and showing you like a certain liquidity.
Just a long and short position.
Exactly, and anyone can do this on TradingView and do like a before and after. Just so many ways to fake it, and that's the thing in this space. There's so many ways to fake it, but at the end of the day, you're just lying to yourself if you are doing that. But yeah, for me, in terms of the goals, is to improve that personal brand, to help multiple people out. Because that's the amazing thing about the whole DTI. It's not that fact that you've just created like crazy students like myself, Claudio, Chow, multiple other traders. It's the fact that these traders have gone on to now become mentors and help other people. And so it's basically generational. And that itself is just crazy. And that's one definite aspect I want to focus on. And then, that's pretty much it, I'd say, for now. And also, these other business ventures have been out here in Dubai. You just get offered certain business opportunities and idea, 100%. And you can almost be almost like an angel investor and just dump some money into there, see how it goes. And at the end of the day, these certain businesses, some of these businesses at least, are like real tangible businesses. You can really see them for real. And that is something that I like about diversifying the profits. And they're pretty much my goals right now, and just to keep scaling up and keep leveling up, because at the end of the day, you can't get too comfortable. No matter where you are, even we're chilling in like penthouses now, going from villa to villa, supercars, different like Ferraris and Lamborghinis and everything. By the end of the day, that's not the end goal. You have to keep leveling up, and that's leveling up. That's like the best thing I've taken away from whatever you've been saying for the last few years. That the level up is what needs to be maintained, and for me, that's honestly like the number one thing. Everywhere I am, I just have that hunger in me still burning, because where I come from in Manchester, it's not the most the prettiest place, and I don't come from exactly like a very well-off family. I'm still trying to make it out. I'm still trying to help out people and put people on. So the hunger is always there. It's going to be there forever. It's never going to stop. And just to keep going and keep pushing myself.
Yeah, 100%. Well, I mean, that's what I feel like life is actually about. Like, even when I got the Bugatti, everybody was like, yo, like, what now? And I'm like, what are you talking about? What do you mean, what now? Like, there's still so much more to accomplish. Like, it still just feels like the beginning. But other than that, for everybody watching, I appreciate you guys. If you watched all the way to the end, of course, ads, I will have all of your information down in the description for those of you guys that want to follow ads, want to see what he's doing and follow his journey. It'll all be there. Appreciate you for
Thank you very much.
Thank you.
Appreciate you.